Let's take a step back and look how the market has reacted this week to that MPC decision on late Monday to keep the interest rate on hold at 12%. We initially saw a 3-year government bond yields rising in anticipation of a rate hike. Subsequent to that, what have yields been doing?
Good morning, and thanks for having me this morning. Prior to the MPC announcement on Monday, we've seen the yields on the government bond rising across the tenor from the short to the belly to the long end of the curve, approximately about 50 to 100 basis points. We saw the 3-year trading as high as 16 to 15%, and the belly to the long end of the curve trading as high as 14 to 14.5 too. But don't forget that before this announcement, markets had anticipated an average about 50 to 100 basis point increase in the MPR. But shockingly, we saw that the MPR was left flat at the end of the meeting. And in reaction to that, in the secondary market, we've seen a lot of basis point dropped across the tenor from the short to the long end. We've seen an average of about 150 basis points on the short end, while from the belly of the curve to the long end, I've seen about 100 to 150 basis point drop too. So, yeah. This is in reaction to the fact that prior to this, the market sentiment is that these yields are actually very attractive. And after the announcement of the MPC, which left the MPR flat at those levels, we've seen demand and flows come through from both PFAs and banks.
You said a shock decision there by the CBN, as of course he said that that Governor Sanusi saying that the previous rate hikes still need to filter through to the market. Do you feel that there's still room for further rate hikes at this point?
I think there's a possibility of an increase. Don't forget that they've done a lot of we agree that they've done a lot of front loading between the second quarter of this year till now. And the highest seen in the last emergency meeting, which saw about 275 basis point increase. That being said, I think the ambiguity around the first subsidy remover is still what the regulators are still looking at. And the possibility is there going forward. If the coast is clear on whether the oil subsidy will be removed or not, and that will put a pressure on inflation. And the possibility is there that there actually might be another line of increase.
But Sanusi indicating that's still a long way down the line. Let's take our attention to the Forex auctions that we've had this week. What type of supply-demand dynamics have we seen in the market?
Sorry, I didn't get that. In
terms of the bi-weekly Forex auctions that we have every week, what type of demand-supply dynamics have you seen playing out in terms of the Forex market?
Well, the demand on the Forex market is still very there, and there's still a lot of pressure on the currency. I've seen on the auctions of Wednesday, we saw a demand of about 400 million, and out of the 250 million sold put on offer to the market, and 250 million sold. Don't forget there's actually there was an overhang between Monday and Wednesday, which actually put further pressure on CBN to devalue the currency from 155 to 154 to 155.61. But going forward, I think the pressure on the currency will still be there. But having moved the reference point from 150 to 155 by the CBN in an announcement of the MPC on Monday, I think they are within the room to be able to curtail the pressure that is coming from the secondary market. Then again, I think the only trade that they will have will be probably the slow accretion in our reserves.
As you say, that is a big concern going forward, and they sold dollars rather at 156.21 in Wednesday's auction. That's the weakest that we've seen since mid-October. As you say, that you still see them having firepower to be able to defend the currency with this modest devaluation, but are you concerned that we might need a more aggressive devaluation further down the line?
For now, I think it's still within their power to be able to defend the currency at this range. Don't forget that within this range of 3% to minus 2 or plus 3% at around 155, we'll still take the currency to around maybe around 160. And presently, market is trading around 159 level. And considering the fact that between now and the end of the year, which is December, we don't expect to see so much activities in the market, and actually it might reduce the kind of pressure we've seen in that line. And even if there's any demand coming through, I think it's within their power to be able to intervene by selling of the USD in the secondary market, and that will definitely tame the pressure on the currency going forward.
So that being said, I mean, what are your trading ranges at this point in time that you're factoring in for the currency?
Well, we see this thing trading between 158 to 160. We see a resistance around 160 and probably a support around the CBN levels.
Let's take a look back on the bond market. You said we've seen yields coming down there. Where's activity being centered around predominantly in the markets?
Activity is actually across the curve, from the short to the belly to the long end of the curve. But we've seen so much demand coming through from the medium end to the long end, and the explanation on that is being the fact that we've seen a lot of demand coming through from PFEs and banks, and considering the fact that, especially on the long end, we've not seen so much supply in that bond coming from the reopening of the auctions, at the auctions from the DMO, that's put a lot of pressure on that bond, and we've seen it trading as low as 13% in the secondary market. What
type of appetite are we seeing coming through from foreigners in the markets?
Foreign investors are actually been very light in terms of investment in government security. We've not seen so much demand coming through from them. Albeit, we've been seeing them coming through in trickles, but not seeing nothing very significant.
Are you concerned about how this eurozone crisis is going to impact demand going forward for fixed income instruments from foreigners, obviously?
Well, there's a big concerns about the look for the emerging market euro bonds. For lookers, since we don't really have so much holdings from the offshore guys, I don't really see much of pressure coming through in that side. But as flight to safety continues in the eurozone, there actually might be some sell-off in the emerging market euro bonds, and that actually might affect the sovereign bonds, as we saw in September. We could actually borrow a leaf from what happened in Germany in their auction, which produced the weakest results so far, about lower subscription, below what they put on offer. So that being said, I think going forward, there actually might be some sell-off if the eurozone crisis still continues on the emerging market euro bonds.